Hello and welcome to another episode of Working Dad Trader. In these episodes, it's basically looking at my trading 212 portfolio every month. It's a series that I've been doing for a while just to give you an insight on what I've been doing, etc. This is the month of September, and we shall now go and have a look at what's been going on in September. If you want to thank me for all this material that I'm putting together every month, then the biggest thank you can give me is smashing that like button and obviously subscribing if you haven't already. Okay, thank you very much. Let's go and have a look. Okay, so as we all know, and we can see from the chart, the S&P 500 is down this month. As predicted, and I predicted this at the start of the month, start of September, when I brought out a video saying the S&P 500 will crash. If you haven't seen that video, then go back and check that out. It's just something that I predicted at the start of the month. As we look at the chart, it's interesting to see that it obviously came straight down and it hit the 100 moving average. And then it sort of rallied a bit for a few days back up and sort of hit the 50 moving average, and then it's obviously come back down again and sort of hit the 100 moving average again. And we wait to see what it's going to do from here. That could be where it's going to keep bouncing off and then go back up into October. Or obviously we have to be careful to do which we call the dead cat bounce, where it's gone up to try to sort of trick people and then it's now going to go lower. So we're waiting to see at the moment which way it could go. In my opinion, I'm not sure. It's hard to predict really what these things are going to do. And historically, October is a better month than September, so possibly it will then start going up. But no one can predict the future. No one knows for sure what will happen. So this is the time where we just need to be careful, because like I say, it could still go down further yet. But we shall see over the next few days and going into the start of October where the S&P 500 is going to go. If we move on to the historical charts of the S&P 500, which I also showed in that video of the S&P 500 is going to crash in my prediction. As we look over the last sort of 20, 25 years, I think it is on the chart, that September is historically a bad month. If we look, that it's always a negative month on average. Obviously, you get the odd years where it is positive, but on average, as an overall average, then the month is always down, and it has been like that. I'm sure it happened last year as well. It's just a historical thing that always seems to happen, that in September the markets drop and plummet. But if we look at the charts, it's not all doom and gloom. Historically, November and December are really strong months with a really strong finish to the year. As we get to sort of the American Thanksgiving time of the year, then the markets then really go quite strong. So we've got that to look forward to, and historically that again always happens. So yeah, it's things in your portfolios are getting battered at the moment, but keep calm and just bear in mind that the end of the year gets a lot better historically. If we move on to also looking at the S&P 500 total year returns, and this is this picture shows it from 1928, which is nearly 100 years. It's just under the 100-year mark, and we look at how many years every year's been positive and every year's been negative. I mean, people say you shouldn't invest in the stock market. When you look at this chart, 73% of the time since 1928, there's been a positive return from the S&P 500 compared to a 27% negative return. So that's telling you that 73% of all the years since 1928 have been positive in a return. So, I mean, that's fantastic odds. If you went into a bookmaker or placed a bet and you had a 73% chance of winning or doing well from it, then you would take that all day long. And it's just a no-brainer. And when you look at the historical data, it proves that putting your money into the stock market sensibly, even if it's just into an S&P 500 tracker or something like that, over nearly 100 years, 73% of the time, your investment is making money every year. 73% of the time, that is like crazy. So bear that in mind as we're going through this really bad month, that it's just a phase and things obviously will get better, and just relax. So moving on to my trading 2-1 portfolio, obviously with all that's been going on, it's had a massive effect on my portfolio, and it is down to, I think at the moment as of today, it's about 2.3%. I think the start of the month at one point it was about 10%. So it's gone down massively, obviously, during September. Lots of situations why. I mean, obviously, I've got a big holding of Chinese stocks, and that's been an ongoing problem all year. So that's been really dragging my portfolio down for about the last 3-4 months. And if you see my other series, then obviously I've been through that before, where that's having a massive drag. I think roughly about 20% of my portfolio is invested in the Chinese stocks. So that's been, and nearly all of them are down, especially the big ones like Alibaba and Tencent, obviously are down quite massively. So that's been having quite a big pull down on my portfolio for a while. And obviously that what's been going on with the S&P 500 and how it's hit the stock market, it's obviously then pushed it right down. So it's down to only 2%. Yeah, I say this is historically what happens, and you can't get too over emotional with it. And I'm sure as we get to the end of the year, it will go back up again. So I'm quite relaxed on the situation. I won't go through all that has been said before on Alibaba and Tencent and other Chinese stuff. I've said this in other videos before of my opinions and stuff like that. So I'm not just going to skate over those types of stuff. Obviously they're down, and this, like I say, I've done other stuff on that. Things that I have been buying in the dip is the new one. Obviously is Alphabet, which is Google and all that stuff that Google does. I've been looking to get in on this sort of stock for a while, and it's been down sort of roughly 4, 5, 6% over the month at some points. So I thought it was a great opportunity to get in and just get a bit of that stock, because I mean that's a fantastic company. So although things have been negative, it's also a fantastic buying opportunity, especially if you've got some spare cash around. So it's a great time to go shopping and get some really good companies that are on discount basically. So yeah, so I managed to get that. Facebook, which is my biggest holding in my portfolio, that is down about 9% for the month. So again, that's had a big drag down on my portfolio. When we sort of go through it, why it's down so much, Facebook has been down 9% for the month. But again, I also bought some more Facebook to strengthen that position. Games Workshop, which is also one of my big holdings in my portfolio, that is down nearly 10% as well for the month. I think a lot of, obviously that's a UK stock. Games Workshop Group do obviously a lot of the games stuff to do with like Warhammer and stuff like that, and fantasy games, etc. Massive company doing really well, fantastic profits. But I think recently in the month they were talking about, when they announced that they can foresee a lot of problems with delivery problems with the world that's going on, with having problems with delivering costs, and how the costs have escalated around the world, and how getting things around that might have a bit of an impact on business, especially as we run into the sort of Christmas festive period. If costs are more expensive, then it's a bit more tricky to get things to certain people around the world. They're just saying that's going to maybe impact on some of their revenue. So I think that's why it's down, and it's a massive overreaction, I think, to it shouldn't be down 10%, but that's what it is. Again, I've also bought more of that stock because I believe that's a great company. Another new one I bought was an American company called Joint. They're in the US, and they run loads of chiropractic clinics. They're not quite, I don't think, all over the US yet, but I looked into this company. Someone that gets a lot of back trouble myself, and go to chiropractors. I know how important it is, and how fantastic work chiropractors do to keeping your back in good shape and taking some of that pain away. And this company looks really great. It's got growing profits, and the stock's been going up for a long time. There's a lot of expansion planned for the next few years. So they're in a great position, and I quite like that stock. And like I say, they got a lot of growing to do still. And I think on the current price is about $95, and then if you look on like Yahoo Finance, they're sort of talking of the average sort of target price of $125. I would say probably more than that, to be honest. So I'm looking at that one as a company that's going to grow and hopefully get some nice profits on that one. Any other new ones? I've got another new company that I bought recently, only a small position, called MaxCyte. They're in advancing discovering of cell therapies. They're into a lot of the cell therapy sciences and stuff, looking into how they can develop this to cure obviously illnesses and stuff like that. With everything that's been going on in the last couple of years, I think making and looking into how they can eradicate illnesses and help things and stuff like that. And cell therapy is going to be a massive, massive thing, I think, in the future. It's something that I've been looking at for a while. I think a lot of the healthcare sectors are looking quite promising over the next 5-10 years. And it's something that everyone should sort of look at, the health sector, and where they can get in and look at some of those stocks. I think it's something definitely that is going to do well. So yeah, this company at the moment, I just took a small position. It's currently at about, I've got it on the UK version, but on the Yahoo Finance, it prices it in American dollars. It's $12 at the moment, roughly, and they're talking about an average target price of about $19-20. There's a lot of growth still in that. The company's been growing quite rapidly. Obviously, it's still carrying a bit of debt as it grows. It's quite a new company. So yes, I've only got a really small position on that. So I'm looking for some type of sharp growth. So that's something new that I put into my portfolio. And generally, a lot of the stocks, obviously, I still got a lot of green stocks there where they're doing quite well. Although there are a lot of them are down, there's still quite a lot of green. Obviously, Tencent, etc., is down. But I'm quite happy with the portfolio. It's maybe bigger than I wanted. I like to try and keep it under 30 stocks, but I think it's slightly more, 31, 32 stocks. As far as the allocation, Facebook, as I said, is my biggest holding. That's at 21% of my portfolio, which is maybe a bit high. I would maybe try and prefer to have it around the 15% mark, but that's where it is at the moment. It's at 21% of my portfolio. Obviously, Facebook is a fantastic company. I've got no really issues because this is just a blip, and Facebook will go on just being a money printing machine. And it's been one of my best stocks since I've started this trading 212 series. It's just been fantastic growth for it and made me lots of money. Obviously, Alibaba is the second holding at 11.8%, and obviously we all know the story about Alibaba, and that's dragging my portfolio down. Games Workshop comes in at third at 10.28% of my portfolio, and like I say again, this month it's been about 10% down, but it's still green, it's still positive for me. I'm still in profit with that stock, but again, I think it's just a temporary pullback, and I see that carrying on growing because it's going to do well. And these are the companies, these three holdings here are ones that I'm going to keep for a long, long time because I'm a long-term investor. Okay, so that's generally the feel of my trading 212 portfolio. Like I say, it's been down for a while, been down for this month. But I'm still positive. It's still in the green. It's still positive. 2% profit is better than nothing at all. It has dropped from 10. There's been lots of issues that have gone by before, and that's where we are. I'm still quite happy, and like I say, by the end of the year, historically, things improve. So we shall see where we end up at the end of the year. Okay, so thank you very much for watching, and I hope you enjoyed this, and I shall see you soon.